Hello, everybody. This is the Equity Management Academy special report for August the 3rd, 2021. Gold. The 2021 annual target of 2164 has been activated. Summary. The bond market appears to have discounted all of the talk about stimulus and the threat of inflation exploding. The markets are saying that the consequences of printing the amounts of money that the government is printing is unsustainable. Congress is looking at approving another $1 trillion bill for infrastructure, and more is underway. The 10-year has gone from 177 to 116. If it closes below the 1% yield, it will provide the fuel for a rally in gold and silver and commodities in general, which could be explosive. Looking for a portfolio of ideas like this one, members of Mean Reversion Trading get exclusive access to our portfolio in Seeking Alpha. Fundamentals. From the end of May, we came down aggressively to 1761 on the comments made by Chair Powell at the May Fed meeting about possibly tapering. The market appears to have discounted all of the talk about stimulus and the threat of inflation exploding. The markets are saying that the consequences of printing the amounts of money that the government is printing are unsustainable. Congress is looking at approving another $1 trillion bill for infrastructure, and more is underway. The printing of money looks like it will continue. Based on the 10-year note, interest rates are not going up. The 10-year has gone from 177 to about 116. If it closes below the 1% yield, it will provide the fuel for a rally in gold and silver and commodities in general, which could be explosive. There is a high probability that as we move into the next few months, we could see gold hit 2164 as predicted by our yearly gold report from last October. In October 2020, we published in Seeking Alpha our gold annual targets based on our proprietary variable changing price momentum indicator, the VCPMI. Back in October 2020, the 360-day price trend momentum was at 1771, which was bullish. The VCPMI for the 360-day cycle of 1810 was also bullish. A close below 1810 negates this bullishness to neutral. If long, take profits at 2164 to 2442. With the market closing at about 1888 at the time the report was published, it gave us a pretty good picture in terms of the different filters that the VCPMI uses. The first filter is the 360-day trend momentum. It is the annual trend momentum of 1771. It is the 9-month cyclical moving average. This identifies the relationship with the 9-month cyclical moving average, which was at 1771, and the market price. Since the close was above the average price, we came into this year of 2021 with a bullish trend momentum. Regardless of any fundamentals, this gave us a probability model of the extreme above and below the mean and the extreme levels of speculation. The VCPMI is a mathematical probability model that identifies the extreme levels above and below the average price. Once we identify the average price of it as 1810, then we can extrapolate the extreme levels above and below that price. That shows us when the market reaches an extreme level, when it is most likely to then revert to the mean. It is never 100% certain, but it is highly probable. Since we published the report at the end of September 2020, the direction and trading instructions have been pretty accurate. it has not quite completed the target of 2164, which is the target for the 360-day cycle. The sell 1 level is 2164, and the VCPMI sell 2 level is 2442. Below the mean, the VCPMI buy 1 level is 1532, and the buy 2 level is 1178. If the market trades above the mean, watch for the market hitting the sell levels to go short. If the market trades below the mean, then watch for the market hitting the buy levels to go long. The buy 1 and sell 1 levels have a 90% probability, and the buy 2 and sell 2 levels have a 95% probability of the market reverting from those levels to the mean. The market has reverted from a 61.8% retracement to around 1673. This seems to be the first leg, the first level, or bottom of this current correction that has occurred since May of this year. A 1914 high was made, and we have been in a corrective pattern ever since. We are trading close to 1810, and for those who feel that they might have missed the move, this could be a great opportunity to enter the gold market since that 1919 level. This has been a counter-trend correction. The market is in fair value of around 1810, with the annual target of 2164. We appear to be looking at a 5-way pattern developing. The low on March 8 to the high on May 24 of 1915 is the first leg. It is also established an uptrend resistance level and uptrend pattern. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.